The Central Bank of Lesotho increases interest rates by 25 basis points. Ooh, what does that mean for you as a consumer of financial products? Hi guys, welcome to Money Adventures with TK. If you're new to the channel, my name is tokiso, TK Ntebe, and on this channel, I bring you fresh content on anything personal finance, money conversations, and of course, business-related content. In today's video, I really just want to break it down so that the community of trailblazers understand what the 25 basis points increase in interest rates means for you and for your finances. But first things first, let's explain what the CBL rate is and what it means. Number one, the commercial banks borrow money to meet their liquidity needs from the Central Bank of Lesotho. And of course, the Central Bank of Lesotho will charge these commercial banks what is called the CBL rate, also known as the base interest rate in the country. Currently, previously it was 7% per annum, and because of the 25 basis point increase, has literally increased from 7% to 7.25%. So now you as a consumer of financial products will approach your respective bank to get access to loans so that you can buy yourself a home, a car, a personal loan, a credit card, or an overdraft facility depending on your specific needs. Now the bank will charge you an interest rate, and this interest rate is called the prime lending rate. So the prime lending rate is the best rate that commercial banks will give to their best customers depending on a number of things. For example, your account conduct, how much you earn, how you are segmented within the bank. Are you a private banking client? Are you mass achiever, whatever gold, whatever the different segmentation criteria are, and of course depending on your credit history, your credit score, and your credit conduct. Okay, so that is how they determine. So some banks will add a margin above the prime lending rate. For example, prime plus 1, prime plus 2, prime plus 3, depending on the risk appetite and the pricing strategy. So it's very important for you as a consumer to know how much interest you are actually paying on your facilities. All right. So if you're also interested to know how the prime lending rate is determined, for example, the prime lending rate will be 3.5% above the CBL rate. So for example, if the CBL rate was 7%, you will add 7% plus 3.5% to give you 10.5% per annum. In this case, where it has now increased by 25 basis points, the CBL rate will be 7.25% per annum. You add 3.5% to get 10.75% prime lending rate. Now, there are different interest rate strategies that usually consumers and banks go into. There is what is called a fixed interest rate, where you and the bank will fix your interest rate on your credit facilities at a particular threshold. And there's also what is called a variable or a market-linked interest rate, which will fluctuate as the interest rates and market conditions change. For example, now that inflation is high. So the benefits for people who have fixed the benefits and disadvantages actually for people who have fixed their interest rates is if interest rates are low, they are paying a lot more. But if interest rates go above what is the fixed interest rate, which is above, they will be better off. And vis-a-vis, when yours is variable or fluctuating, is if when interest rates are low, you benefit, but when interest rates are increasing like they are now, you'll be paying a lot more on your loan installments. So now, quickly, what does it mean for you and what can you think about as a consumer, particularly when you have loans? The first step on what I recommend we do first is sit down and actually review by how much your loan facilities will increase by. They've been increasing gradually for the last couple of months as interest rates were increasing. And it's very important for you to sit down and to review how much the incremental amount will be. Number two, now that you know how much the incremental amount will be, it then means that you need to go back to your budget to determine what the impact of that will be. For example, if you're paying 300 rent more on your mortgage or your bond or your personal loan, that will immediately affect your monthly budget. All right. So it's very important for you to go back to your budget and to factor in those additional increases in your installments so that you're not under pressure financially. The third one is if you have excess income, it then means that you need to prioritize repaying your different loans, particularly those with high interest, as quickly as possible so that you have a bit of room to breathe. I always say, just because you qualify does not mean that you can afford. And if there's ever a time that message was important, it is now. So if you're thinking of taking a new loan, be cognizant of what it means from a CBL rate to a prime lending rate to how much the bank will offer you in terms of your interest rate. So we are living in very difficult times. Interest rates have gone up today. The cost of electricity went up end of November. Fuel prices have been skyrocketing. It's just really been very difficult for a lot of us. And worse still, salaries and our incomes have remained pretty much the same, if not less. So if there's ever a time for us to prioritize, to track our spending, and to be mindful of our finances, it is now. So I wish you well. I wish you wealth. I wish you financial resilience as we go through these very difficult financial times. Until the next video, give this video a thumbs up. Let me know what you're feeling in terms of your finances. If you're feeling anxious, let me know. If you're feeling optimistic, pessimistic, if you're feeling just overwhelmed with everything, drop a comment below and let me know. But also, we want to share this information with as many people as possible so that we can grow our community of trailblazers and help each other be financially savvy. So share this with your family, your friends, and people who may genuinely want to hear this conversation, and ask them to subscribe. Until the next video, guys. Love, peace, and money. Take care of your money, and remember, money is an adventure. Signing out.